Remember February 2025. Look at this. This man stood on a stage in front of the entire world and said, "Sell a kidney if you must, but keep the Bitcoin." That was his promise, his religion, his identity. It is now June 2026. He still has both kidneys, but his company just sold the Bitcoin. Look at this filing right here. Strategy. Official SEC filing. May 26 to May 31, 2026 32. Bitcoin sold. $2.5 million. First Bitcoin sale since December 2022. Right there in black and white. Now, was it a lot? No. This company holds 843,706 Bitcoin worth over $60 billion. Selling 32 coins is like taking 1 cup of water out of an Olympic swimming pool. But look at what happened to the market the moment this news dropped. Bitcoin dropped 3.1% to $65,000. $160 billion in total crypto market value. Gone. Within 1 week. Because of 32 coins, that is what we are breaking down today. Why 32 coins caused $160 billion to disappear. The $12.5 billion hole in this company's pocket. And the trap that finally snapped shut. Sit down, this one is good. For 6 years, this man was not just a CEO, he was the high priest of Bitcoin. He turned his entire company into a Bitcoin buying machine, starting in August 2020. He even wrote his own 21 rules of Bitcoin, like commandments, and Rule 20 was simple: you do not sell your Bitcoin. Look at this. This is the actual rule, in writing. In January 2022, Bitcoin was crashing hard, and Bloomberg asked him directly on camera, "Will you ever sell?" Look at his answer. Never. No. We are not sellers. We are only acquiring and holding Bitcoin. That is our strategy. His exact words. February 2025. Never sell your Bitcoin. Same month. Sell a kidney if you must, but keep the Bitcoin. Same person. Same year. 2 promises. Now fast forward. February 2026. 4 months ago. CNBC asked him what happens if Bitcoin stays down. Look at what he said. We are not going to be selling, we are going to be buying. Every quarter, forever. Every quarter, forever. Now here's where it gets interesting. Public companies collectively hold approximately 1.22 million Bitcoin on their balance sheets as of late May 2026. Look at this chart, and this company sits at the very top of that chart. 843,706 Bitcoin, the single largest block. Look at this, which makes its decisions consequential for Bitcoin's price in a way few other holders can match. So when the biggest holder on earth says never sell forever and then sells, the entire market listens. But why did it actually happen? That is the real story. And that is what Uncle is going to break down next. Here is what nobody is explaining simply. This company raised $11.68 billion in fresh capital throughout 2026 to expand its Bitcoin holdings further. Sounds genius. More capital, more Bitcoin. Said here is the catch. The company carries 5 series of preferred stock, with combined annual dividend obligations of $750 million to $800 million every single year in cash, not Bitcoin, cash. And here is where it gets uncomfortable. Its net loss was $12.54 billion, 3rd consecutive quarter of losses, driven by $14.46 billion in unrealized Bitcoin losses. So this company is losing $12 billion a quarter, owes $750 million in dividends every year, and its cash reserve has declined from $2.25 billion at the start of 2026 to just $900 million. That means this company burned through $1.35 billion in roughly 5 months. Uncle is going to say that again slowly. $1.35 billion gone. In 5 months. And those dividend payments are not going anywhere. There is actually a clause buried in the terms. This. When STRC preferred stock trades below $95, the company is contractually obligated to increase the dividend rate by 0.5% on all outstanding shares, raising annual dividend costs by approximately $53 million. The trap this man built for himself just got more expensive. So what did the Never Sell King do? The company announced a pivot from the long-standing never sell strategy in favor of actively managing its balance sheet if it strengthens the company's financial position. Gumroad. Then the CEO got on an earnings call and said they would consider selling Bitcoin to retire debt. Then Saylor himself said, "We will probably sell some Bitcoin to fund a dividend." And then he used a word that Uncle had to look up. He said they were doing it to inoculate the market. Inoculate. That means I am going to break my biggest promise in a tiny dose right now, so that when I break it bigger later, you are already used to it and you do not panic. Between May 26 and May 31, Strategy sold 32 Bitcoin for about $2.5 million at an average net price of $77,135 per coin. Bitcoin slipped below 72,000 within hours. More than $93 million in futures positions liquidated in a single hour, 95% of them longs. 32 coins, $160 billion in market cap gone. That is the power of a broken promise. When Fortune asked why he flipped, Saylor said his never sell comments were just a strategic brushback to mess with short sellers. Translation: I was performing for the bears, and you guys were just watching. Now here's where it gets worse for everyone else. The problem is not the 32 Bitcoin. The problem is what those 32 Bitcoin represent. For years, Strategy was the company that never sold, the company that kept buying no matter what. And because of that, a whole ecosystem grew around the idea. Leveraged ETFs, copycat companies, investors who believed the playbook was simple: buy Bitcoin, hold forever, never sell. But reality has a way of showing up eventually. Some companies that followed the same strategy have already been forced to sell. Others are dealing with losses, debt pressure, and shrinking options. And after Strategy's sale, institutional investors pulled billions of dollars from Bitcoin ETFs in one of the largest outflow streaks we've seen. That is why this matters. The never sell doctrine is running into something much stronger than conviction. Math FMSTR stock has been crushed. Bitcoin is trading well below Strategy's average purchase price. The company is sitting on massive unrealized losses, owes hundreds of millions of dollars in annual dividend obligations, and has far less cash available than it did at the start of the year. And then came the moment nobody expected. The company that built its reputation on never selling, sold. Now Uncle is going to be fair. The actual sale was tiny. 32 Bitcoin is almost nothing compared to the company's total holdings. From a purely financial perspective, selling a few coins to raise cash may have been the cleanest and most logical option available. That is why the amount is not the story. The signal is the story. Because once you spend years telling investors never sell, and then you sell, the market starts asking a very different question. What happens next? And that brings Uncle to the verdict. Saylor is now arguing that never sell should really mean be a net accumulator. In other words, you can sell some Bitcoin as long as you buy more later. Maybe that's a reasonable definition. Maybe it isn't. But it is definitely not the definition most people heard when they were told to sell a kidney before selling their Bitcoin. They have their savings. So when you hear a billionaire, a CEO, or a market guru make an absolute statement like never sell, remember something. Rules are easy to follow when markets are going up. The real test comes when reality arrives. The never sell myth is not dead, but it has definitely been tested. And if the man who wrote the rules can change the definition when circumstances change, maybe the smartest thing you can do is stop following slogans and start following the numbers. Because balance sheets don't care about narratives, and math doesn't care about promises. That one uncle tried to warn you. And before you go, tell Uncle in the comments, what finance topic should we break down next?